It's Tuesday and it's 10 a.m. here in Lagos, Nigeria. That means it's time to do business on Business Morning here on Channels Television. So the next 55 minutes promises to be efficiently spent if you stay here with me. I'm Ini John Mekwa. Let's start off with global oil prices. It's edged up on Tuesday, supported by a softer dollar and a U.S. plan to restock petroleum reserves. But gains were capped by uncertainty over the impact of rising COVID-19 cases in top oil importer China. Brent crude futures were up 24 cents at $80.04 a barrel, adding a 76-cent gain in the previous session. U.S. West Texas Intermediate crude futures rose 49 cents to $75.68 a barrel after climbing 90 cents in the previous session. Oil prices have been buoyed by a U.S. plan announced last week to buy of 3 million barrels of oil for the Strategic Petroleum Reserve, following this year's record release of 180 million barrels from the stock. A weaker greenback has also supported prices, making oil cheaper for those holding other currencies. Still doing the markets now, but palm oil futures rose for a second straight day. That was yesterday, underpinned by rainy weather in the world's second largest producer, although gains were limited after another COVID-19 outbreak in key markets in China. The benchmark palm oil contracts for March delivery on the Bursa Malaysia Derivatives Exchange gained 42 ringgit to 3,960 ringgit. That's about $897 a ton by midday. It had lost 1.9% last week. The market is firm with reports of flooding in many parts of Malaysia and also on a leading analyst's bullish view on the markets. Let's come to Nigeria now. The Sugar Sweetened Tax Coalition of Nigeria is asking the federal government to commence the immediate application of the proposed 10 naira per litre sugar tax on carbonated sugar drinks and beverages. That's supposed to start on the 1st of January next year. The coalition made a call at a meeting in Lagos saying that the government should not succumb to cheap blackmail, they call it, from companies placing profit above the health of Nigerians. The coalition also gave some recommendations at that meeting.
We are also recommending that beyond using the Finance Act, which is a yearly process, that the government should institute a sustainable legal framework for XXB tax with clear timelines that Nigeria attains the WHO recommended 20% tax of retail price. And we're also recommending that the government should begin necessary engagement to ensure that the policy that SSB taxes are dedicated to public health.
Okay, welcome back. Well, a bit of good news in the country in the midst of all that seems not so good is that Nigeria's oil and gas earnings is up more than 60%, in fact 60.42% to 18.18 trillion naira in the first 8 months of 2022. That's according to numbers from the Central Bank of Nigeria. This 60.42% is compared to $25.47 billion in the corresponding period in 2021. For 2 months now, we've seen that the country's crude oil production has increased above 1 million barrels. And Nigeria has overtaken Angola again. So Nigeria is now the leading producer of oil on the continent after 2 months. But we have not yet hit that quota of 1.8 million barrels a day, which is what OPEC has given to Nigeria. I know the last time I had this conversation with Professor Damilola Olawi, SAN, we were talking about oil theft and how Nigeria had dropped. That was in July. On the opposite side now, we're talking about Nigeria has regained that. Prof, good morning. Director of the Institute for Oil and Gas Environment, Energy and Sustainability Development Institute, Afe Babala University, joining us from Qatar. Sorry, let me just ask, did you watch the match? I hope you did not turn to an Argentines, when they were rejoicing over the winnings.
That was a very tough match to watch, but I enjoyed every bit of it. Thank you very much.
All right, so let's go to the business of the day now, Prof. So the last time I had you on the show was in July, and we were talking about the issue of oil thefts and of course the reduction in the outputs of crude in Nigeria, and 2 months now we've seen a recovery. Is it enough? Is it enough for us to celebrate yet?
Well, thank you very much. It's encouraging and commendable, I must say. Like you mentioned, we were very the picture was very discouraging the last time we spoke, and now that we've made some progress, I think it's encouraging. But it is not time for the victory dance yet. I think it just shows that some of the initiatives designed to address this menace of crude oil theft are beginning to show results. We're beginning to see that some of the changes made, such as improvements in the security architecture, as well as the signing of security arrangements with local entities, some of those efforts are probably, of course, it's clear they are paying dividends now, but we must increase those efforts. We must ensure that we are pursuing them coherently, such that we can sustain the progress made and we can even achieve greater results.
Some people are not very comfortable with the approach that the federal government has taken, and the NNPCL at this point, engaging the private sector for the security. Some people are not very comfortable with that. What's your take? What's your perspective?
Of course, it's not an ideal situation. The primary function of government is to ensure security of lives and property. So when that primary function is delegated to an entity, it shows that perhaps government has struggled to be able to discharge it alone. But the most important thing for a country is, and for Nigeria, as a matter of fact, is to ensure that at least we are securing our assets, we are securing, the primary driver of our economy. So, of course, ideally, that security responsibility should be undertaken by government. But the results so far shows that, and of course, in many countries, it is always better to undertake this whole public-private partnership approach to security. So if government is partnering with private entities and it's yielding results, then we should be optimistic about that. And of course, with time, we will see a situation whereby government will be able to bear more of that responsibility alone, rather than leaving it in the hands of private entities. But I think I'm a very practical business lawyer, and I am focused on results. And I think the results we see so far are encouraging, and we should commend those efforts.
Cost the country anything other than the finance, the fee being paid to this private sector? I know when the amount came up, that was another hoo-ha, reaction that came with that. But other than that, does it cost the country anything? Does it chip off our image, our brand, or, in that area?
You mean in terms of
engaging the private security?
Yes, in fact, in terms of when you look at the attractiveness of the country to external, to investors generally, it's not really reassuring that government is not able to secure assets and infrastructure. It's not a positive sign. But of course, the most important thing is to achieve stability in the market. And if the current approach is leading us to that stability, then we should study why it is achieving results and try and ensure that we sustain it. And of course, there is no regulatory approach that is perfect. There are imperfections in every regulatory approach. So the primary function of stakeholders in the energy sector is to refine every approach that we are undertaking and ensure that we remove those imperfections and fine-tune them. So I think I understand the concerns by stakeholders that why should government delegate responsibility? Of course, there are international reputation concerns and all of that. Those are true. But I think the positive aspect of what is working now, we can refine it. And as we learn lessons from whatever it is that we're doing right now and is yielding those results, we can then refine it and make sure that going forward, we can adapt those lessons to ensure that even government will then be able to take those responsibilities on 100% in the near future.
All right, talking about sustenance and in the future, the federal government is projecting that the country will hit 1.6 million barrels from next year. Is this realistic from your perspective?
It's quite an ambitious projection. If we are going to achieve it, there are a lot of things that need to be done. We cannot just wish it into existence. And I say that because achieving those projections would depend on a number of factors. Number one, to what extent are we able to continue to improve the security situation around the oil producing areas? That's number one. Number two, to what extent are we able to ensure that even some of the security arrangements in place continue to be implemented with all fidelity to the ideas behind them? Number three is that, to what extent are we able to even ensure that other aspects of oil and gas production are improved to ensure that investors have confidence in our market? Because increasing production is determined by a lot of things. To what extent are investors, financial market participants willing to finance some of these operations? There are also other factors that we have to keep in mind. For example, there is a reduced global appetite for oil and gas financing generally. These are factors that will determine whether we meet those projections. So I think while those projections are quite ambitious, I think if we take the right steps to work towards securing some of those factors that I mentioned, then we may be very, very close to achieving them. But as of today, we have a lot of work to meet those projections.
All right, so if Nigeria does not hit that 1.6 million, I guess one of the consequences will be less revenue for funding the budget and then more borrowing.
Exactly. I mean, those would be the unfortunate implications, because we still run an economy that depends a lot on those revenue. And if we cannot achieve meet the projections, then it will mean less financing, and it would mean resulting to borrowing. And of course, it will also mean some of those infrastructure projects that are ongoing. It may be difficult to sustain them. It would have wide-ranging impact. And that's why I think one other factor that we must continue to put on the table is the need for whole-scale economic diversification by strengthening other key sectors. For example, the progress made in diversifying to mining solid minerals should be sustained, such that we can have an economy that does not depend 100% on oil and gas revenue.
So there's something the NNPCL said some time ago, which I think is kind of worrying, even though it's not new. The NNPC Limited had said that it is working to address the lack of coordination among oil sector players, from regulators to security agencies to host communities, private sector outfits. Now, we have heard between the Customs, the Ministry of Finance, even the CBN and the Ministry of Finance, so this lack of coordination among agencies, especially when they're operating in one sectors, brings some kind of disruption to the growth of the sector.
You're very correct. The truth is that whether we're talking about oil theft or insecurity, these are multi-dimensional and multi-layered problems, and we must approach them through that lens. And the only way we can approach a multi-dimensional problem is through multi-stakeholder cooperation and partnership. For example, the issue of oil theft, it's a security issue. It's an economic issue. It's actually also a foreign diplomacy issue. And I say this, the reason why oil theft is increasing is because there's a market for it. Where is the oil going to? That is a foreign diplomacy issue. So the countries that are receiving that oil, we have to, ensure that we get the buy-in of even our foreign policy to ensure that we are able to stop that outflow. So you see that there is just so many dimensions to such a problem. And that's why it is important to get the buy-in of all the stakeholders that are involved, whether we're talking about the security agencies, whether we're talking about transparency entities like NEITI, or we're talking about human rights bodies, or even talking about our foreign affairs unit. We have to get everyone on the table to have a multi-stakeholder approach through an MOU that brings everybody on the table to say, this will be your role, this will be your responsibility, and this is how we're going to measure that you're performing those roles. And if we can do that, then we will be achieving progress. But what we see today is the direct opposite, and that's why the statement by NNPCL is very correct. There is a need to increase that stakeholder engagement, stakeholder approach, multi-stakeholder partnership that will lead us to blocking all the loopholes that make it very, very easy for agents that weaken our economy to be able to steal our common patrimony and do damage to our economy. So I think I agree that we need to bring all the stakeholders to the table, and we need to allocate clear responsibilities with clear timelines and ensure that we're all making progress in the right direction.
Yeah, because it's not just an oil sector challenge in the country. Do we say that it's, you said allocates their roles, the different role. Is it the confusion in vision, or is it every agency or different agencies or ministries have their different focus and targets, and that's why the clash comes on?
There are many aspects of it, and you've touched on some of them. One of them, one key aspect is when the agencies are not communicating with each other. And that may not be because of malice, it's just because they don't understand how their responsibilities overlap. So, for example, when you work in the energy sector, it's very, very difficult for you to think maybe you have any human rights responsibility, because you say, well, this is not the human rights agency, go to the human rights agency. But in reality, these things, they intersect a lot. And so I think one thing is because maybe several of the agencies may not be communicating with each other enough. And that means they are not, engaging in what we call joint programming, developing joint initiatives to address common problems. And that also means they are not, engaging in information sharing. So, for example, in many countries, there will be the possibility of having a common database whereby agencies can actually track progress on multiple issues at the same time. So you don't have to be in the ministry for you to access information on something. So these are initiatives, information sharing, interoperability, having, common programs, common initiatives. These are activities, deliberate activities that will mean that agencies that have similar roles and have responsibilities in ensuring transparency in a sector can talk to themselves more, work together more, and then align their priorities. So I think if we can think of it in that holistic manner, we will start making progress in addressing the problems that NNPCL identified.
So who should coordinate this, this big picture that we are talking about? After all, everybody's working for the growth of the Nigerian economy. So who should do it?
I think there's a big role for the federal government in this. And in the past we've had similar approaches. And I'll give you a very recent example. When the COVID-19 pandemic was at its peak, the federal government set up a presidential committee to look at the issue, and they were able to draw in stakeholders from almost every sector, every ministry, every department that is involved in that issue. So now the federal government has identified crude oil theft as a national security issue. So the next step might be to then draw together these key bodies that we've talked about to another, presidential, initiative that will bring the key stakeholders together to look at the issue with one common eye and to look at the roles and responsibilities that they will have. I think if the federal government can allocate those responsibilities, it will be a very strong platform through which each entity will take their responsibilities seriously and discharge them accurately.
All right, Professor Damilola Olawi, SAN, thank you so much for sharing your time with us this morning and sharing your thoughts too. We do hope that the federal government add this to their federal responsibility, and we will eventually see the results of it. And have a safe trip back to Nigeria when you're ready to come back from Qatar.
Thank you so much.
All right, let's take a break now. We're still talking commodities. We'll still talk about oil, and but this time to have a global perspective. That's after the break here on Business Morning on Channels Television. welcome back. We told you earlier that oil prices edged up, supported by a softer dollar and a U.S. plan to restock petroleum reserves. But the gains were capped by impacts of rising COVID-19 cases in top oil importer China. As we know that China has eased restriction, and the result of that has been more cases and deaths. Yesterday they recorded, I think, the first set of deaths, and we're expecting 3 peak periods of COVID-19 cases in China. Well, let's drill in on this with Dr. Clement Igbanugo, is an economist with financial derivatives, joining us from Victoria Island. Good morning, Dr. Igbanugo. Thank you so much for your time this morning. Is it now a crime for China to ease restrictions? After all, the people protested and asked for it, and now we are seeing that becoming an issue. Now they're having more cases and even deaths.
Yeah, thank you so much, Imi. It's not a crime for China to ease the restriction. Remember that on Friday, after a top policy meeting in which the president assured the world that they're going to do whatever it takes to boost growth, economic growth in China, market became a bit boisterous. Oil price responded positively to that commitment. But we see what is happening, protests here and there before now, and then China decided to begin to lessen its hold on zero COVID policy. But the thing is that China had been hardly hit in this headwind of 2022. Remember that in 2021, its economy grew by 8.08%, but this year, just by 3.2%. And imports grew only by 2% this year. In fact, import declined by 2.4% this year, relative to its growth of over 10% last year. In fact, oil demand or import from China declined by 180,000 barrels per day in 2022. And Chinese export constitutes about 20% of its GDP. And our Chinese trade is about 13% of global trade. So China puts so much for global trade, for demand for oil price. And that is why China matters so much to the world. Of course, we sincerely believe that in days to come, China will do whatever it takes to ensure that containment measures are taken in a way that will not strangle the economy.
You know, sometimes, Dr. Wango, I wish that Nigeria, with over 200 million population, we can also determine the price of oil. We are major producers of crude oil on the continent. We have the population, we have the market, but we don't determine the direction of the price.
Yes, fine. We are major producers in Africa. And even sometimes this year, Angola overtook Nigeria. Nigeria just recovered in November. You know, at a point we're producing about 900 when Angola maintained a daily production of not less than 101. But with 1.16 in November, we're coming up. But remember that if you talk about Saudi Arabia, talk about Russia, even the US and all that, you discover that what Nigeria is producing is actually not able to control the market. But the thing is, Nigeria this year have really not had its fair share of the tailwind in oil prices, the windfall in oil prices because of a huge decline in output. In 2020, Nigeria oil output averaged about 1.6 million barrels per day, 2021 1.4. But this year we see where we've been. In fact, what we're having 1.16 in November is a big improvement compared to what we've been having. And this is having impact on our revenue, it's having impact on exchange rate, and having impact on a wide range of macroeconomic indicators in Nigeria.
So now that price is rising and output is also rising, it's been up for 2 months now, and hopefully it will continue to grow. Can we expect any, you know, soft landing, especially for the festive period and the beginning of the new year?
Yes, we will if we have if the gains are sustained. But don't forget, like you said in your opening remark, that the softer US dollar is having impact on the market, and also the fact that US is planning to restock, because this year, US released about 180 million barrels of oil from its strategic reserve. And it has announced that it will start restocking, and these things start stocking the market. So the estimate for oil price in 2023 projection is around the 89, depending on the institution dishing out the projection, but on average between $89 per barrel and $102 per barrel. So oil price will remain elevated, but may not reach the peak of 2022 in 2023. But if we ramp up production, hopefully Nigeria will be able to benefit from the headwind. Because if you look at this year, the indicators are not really good. Revenue to GDP ratio declined in 2022. In fact, it halved the level of 2021 in a year of oil windfall. Even reserve to GDP ratio declined from 9% last year to 7% this year. The worst is that forex sales declined from $29 trillion in 2019 down to less than $16 trillion in 2022. And that shows you the fact that we've not been able to make significant gains from sale of oil. Why? Apart from the fact that we have oil theft and suboptimal production that has reduced the quantity of oil produced in Nigeria, don't forget that subsidy payment is also taking a toll on Nigeria, on revenue, because NMPC is paying from source. And most of the reports NMPC is giving is that at the time they are giving report at any point in time, they are still owing for subsidy commitment bills that they have not paid. And we're expecting that by the end of this year, it will exceed 4 trillion. And you know what that means. So that has really affected revenue. And if nothing happens to it, I'm not sure that the revenue will ramp up so significantly in 2020.
Yeah, bringing back that bitter pill of subsidy, to be or not to be. We have subsidy, there's a problem. We do not have subsidy, it is also a problem. I wonder which administration will really be able to handle this very big elephant in the room of subsidy.
You know, when you have a price distortion, there's no way it will not affect the market, whether it's in exchange rate, whether it's in oil and whatever, because it creates opportunity for rent seekers to take advantage. The argument is that the oil subsidy is for the poor. But the question is, what proportion of the poor are benefiting from the oil subsidy? What is even the true price of a liter of oil that is being imported, that is being subsidized? And what is even the volume? Because from 2012, when we said the volume of consumption, daily consumption was 30 million liters, to 2022, we are now posting 66 million liters. Now, what has happened? What has changed? Economy has even dwindled, because if you look at 2012, the size of Nigeria economy was $455 billion. Today, it's $441 billion. So what have we done so differently that the consumption has grown that much? So you discover that there are a whole lot of inefficiencies in that system. And we truly believe that in 2023, we have no option than to reform. We have no option than to take drastic measures to address most of these economic issues that are holding us ransom.
Yeah, even some people are saying they had expected that with NNPC being commercialized, we would have seen a lot of difference, or there would have been some changes now, but it seems we still have to wait a bit.
Of course, we have to wait a bit, because, well, commercialized, but the details are not clear. The structure has not changed. What everybody was expecting was to privatize the NNPC. Let's have private sectors who are committed to running business at profit coming into play. Let NNPC be quoted at the stock exchange market, and let's move a bit from this government dominated process that is somehow entrenching or promoting inefficiencies in the system. So very much we are optimistic that in 2023 a whole lot of reforms will take place, and NNPC may be part of it.
Yeah, the NNPC Limited has promised that I think by June, by half of the year, next year, they should be on the exchange and give Nigerians the opportunity to also, have a voice in the running of this oil sector. But let's also look at gas now. The price of gas is also up 0.14%. What's driving that, and does it have any impact on Nigerian economy?
Yeah, so much. A whole lot of things driving the price of gas in the global market. Don't forget that the EU cap on gas price has just been concluded. It dragged so much because Germany didn't want to sign initially because of some issues they have with the agreement and all of that. But yesterday, overwhelming agreement, and by February 15, they will start implementing that gas price. That's the ceiling, that's the cap on it, that it won't exceed 180 euros. If it exceeds 180 euros or $191, there will be a trigger, But there is also a natural issue with the price ceiling, the supply shortage. So when you put a cap, when you put a ceiling on a price, on the price, there could be supply shortages, and that supply shortages could disrupt the market. Well, EU has been running away from rationing, but if that happens, it means they may have to resort to rationing. But of course, they have there are safeguards in the agreement they had, that if there is supply shortage, well, they may suspend the price cap. If that is what it is, then it means there may not be more trouble. So market is already anticipating that there's going to be shortages, because if you don't want to sell at the cap, you may have to restrict your product and all of that. So there could be shortages in the gas market, and that is actually driving price, despite the fact that there is a forecast that the weather condition will improve.
And Nigeria hasn't been able to plug into this very pressing need of gas in Europe because it's a long-term, it requires a long-term investment, something we cannot just do at this time.
Exactly. Well, but not really that it's something we cannot do, but the nature of things in Nigeria. We have so much gas reserve that we can plug into this opportunity. But of course, the fundamental constraints that we have in terms of taking a bold step to actually turn around the gas ecosystem. And so far, Nigeria has not been able to do so much. Some African countries like Mozambique and all that are actually rising up to take advantage of this opportunity in gas ecosystem. So hopefully Nigeria also, but of course we are seeing improvement in the gas output in Nigeria, and if much is done to this, I think there's more hope to come.
All right, but this issue of sugar rising because of supply in Thailand and Brazil. Thailand, I know yesterday there was a catastrophic incident there, cost a lot of lives, but I don't think that's why we have this decline in supply in Thailand and Brazil.
Yes, of course. Sugar, we've been having back and forth on the price of sugar, the supply of sugar, because of even the alternative uses of sugar, especially as oil price remain elevated. So the price of sugar will remain volatile even in the coming year.
All right, Dr. Clema. Any other development in the commodity space at this time we should keep our eyes on?
Yes, of course. I think we'll see what is happening in wheat market. Late last week, we saw wheat prices falling after remember that because of the renewed shelling of energy facilities in Ukraine by Russia. The port of Great Odessa was closed, but it opened late last week, and that led to a fall in the price of wheat. But of course, this week we see the price of wheat upticking again because there is the increase of or demand pressure, and that demand pressure is pushing up the prices. And of course, you know what it translates to in Nigeria: bread, the Movita, and all of these things. So import prices and all of this. So that is, and of course, you see inflation. Nigeria inflation has not started tapering in line with what we are seeing in most economies. You see inflation begin to taper in the US, in the UK, in some other sub-Saharan African economies. And so if the price of wheat continue this way and the price of other key commodities continue this way, we'll see that food inflation, which is now at about 24.12, could go higher, and that could keep inflation accelerating.
Yeah, so I guess this, because yesterday we had an association meet and tell the federal government to please implement that sugar tax to help for Nigeria. I guess that will help reduce demand for it and reduce the need for foreign exchange that we need to buy this sugar that comes into the country. But I guess we'll have to wait and see how that goes.
Anyway, but that also is a bit dicey in a period of cooking prices, and then you are putting sugar tax, you are putting excise tax on beverages and all of that. That could have a very big impact on the price, because some of these products, the demand elasticity, some of these products are inelastic in some way, or fairly inelastic. But for those that are fairly elastic, well, that would be effective in reducing demand. But if it's something that is fairly inelastic, that would much more contribute to raising the price rather than raising consumption for those commodities.
All right, Dr. Clement Igbanugo, economist with Financial Derivatives Company, thank you so much for your time this morning. See you on Thursday.
Thank you so much, Shini. I do have a nice time.
You too. All right, not sugar market now, but we head to the money markets with Aniti Edits. Hi, Aneti. Good morning. Do you take sugar? Is this sugar tax going to disturb you?
Good morning, Ini. Well, sugar is not my preference. Honeys. You know,
okay, so you don't really care. You don't really care whether there's a tax on sugar, carbonated drinks, or not. It really doesn't.
As long as there's no tax on my honey, I don't have any problem.
I'll tell the federal government to tax honey also.
Most likely. You never can tell. Yeah. Anything is taxable in the current administration. Okay, so now let's go straight to the markets now. Equities market is our focus for Tuesday. Now, on the board, there's what you see there. The market was up, sustaining that bullish run, which it had dominated the better part of the second trading week of December. Now, the third trading week of December is getting on to another bullish start, 0.20%, which is what you see here, 49,000 level. It crossed back. And then, of course, we are expecting that this market is going to continue this run into the 50,000 points, which is again early in the year, and then sustain until it drop sometime in September. But now, in terms of the value was up by 53.74 million naira at what you see here, billion to be precise. Now, for the sectoral performance, there you see is kind of a mixed picture there for the sectoral performance. The 3 out of the 5 tier 1 lenders, the likes of GT Bank, the likes of Zenith Bank, the likes of GT Bank, Access, and UBA, they were responsible for the 0.12% increase that you see on that counter. While on the consumer goods sector, we saw international breweries as well as other bellwethers in that counter lift that counter by 1%. That was the biggest gainer on that counter. But on the flip side, you see the likes of oil and gas and insurance being in the red, while industrial goods was unchanged. We also saw that Boa Foods was one of the major factors while the market gained that margin on the index, while year to date has been increased to about 15.68%. Month to date, we're at 3.7%. Now let's take a look at the activity. For the activity, it was all in the red. Volume was down. Value also down. The volume was down by more than 60% or so, contrast to what you had on Friday. Now let's talk to our analyst for today, Bimbo Moronkola, equity trader at Stanbic IBTC Stockbrokers, to tell us more about this market, particularly when you look at the consumer goods sector. We're in the festive season. What's driving the market? Is it the institutional investors, or is it the foreign investors? So she'll give us more details about that. So thank you for joining us, Bimbo.
Good morning. Thank you for having me on this morning, Lindsay.
Yeah.
Okay, concerning the market, yeah, we've seen the market close in a positive region for days, almost over a week right now. But I will say that the gain is actually due to interest, improved buying interest in just a few names, not across all sectors. So I will not totally call it a bullish run, because it's still cautious and cautious buying interest by a few investors. I won't, not even in the institutional investors. The institutional investors are currently quiet. They're more interested in the fixed income market. And the foreign investors right now are also quiet due to the FX liquidity issues, and also most of them, as in what little traction we're seeing from the foreign investors, that they're even more selling interest. So what we are seeing right now is still more retail participants in the market, retail investors cautiously taking position ahead of the year-end results, and it's not anything aggressive. If you look at the trends, even on Friday and on Thursday, the value, even for last week, the whole of last week, the value and the volume of activities in the market dropped. It was even more few crosses that actually attributed to the gains we were seeing in the market. So, like I said, it's actually more cautious buying instead in a few names. Looking at last week, I'm even looking at the data for last week. About 38, it was only just 38 equities that gained in the market. 28 equities lost, as in depreciated in price, while 97 equities they closed flat. So it's still more, like I said, a few names where we're seeing those gains in the market. And like I said, it's still more of retail participants and a few HNS taking position ahead of
okay. Okay, so if I have to go with that analysis, Bimbo, can we say that the market, you expect the market to retract a little bit at the close of today's trading session, or is it still going to continue into the rest of the week? We're in the second day of 5 trading days within this week.
It's possible, yes. We may continue to see the marginal gains that we're seeing in the market, but the trend is still going to be quiet, and activities will be dominated by crosses in a few policies. Yes,
okay, so now for the consumer goods sector, the festive season, do you see the sector, particularly the breweries part, as well as the food as component of that counter? How do you see their performance for the rest of the month of December?
Okay, so we are festive. We expect to see increase in turnover in terms of people trying to buy stuff for the festive season. However, looking at what happened last week, despite the fact that the ASI gained, the consumer index lost 20 basis points. So I will say that fine, we might see some increase in terms of interest in the consumer names. But however, I don't expect anything aggressive. I will expect to see cautious buying interest to do nothing so aggressive. Market is towards the end of the year. Market is usually quiet around this period, except for a few investors trying to take position. I do not expect anything aggressive even in the consumer sector.
Okay, thank you for that analysis, Bimbo. That's Bimbo Morokola, equity trader at Stanbic IBTC Stockbrokers. So, with the exception of today, we have just about 6 days to the end of 6 trading days left in December. So, my guess is that the market, although that green is being with a bit of a mixed sentiment, but I expect a positive sentiment. I don't know what.
Yeah, we're looking forward to that 50,000 level that we missed for a couple of weeks now. It's been weeks since we had that 50,000. We're looking forward to that. But Anita, thank you so much for that insight. Well, let's take a break now. We have another market coming up. You guess it's the crypto market, but Laddie has to hold on for a minute. It's still here, Business Morning on Channels Television. Certainly the most wonderful time in the year, and we're certainly counting down to Christmas here on Channels Television. We'll still be here. We'll do Christmas together. But now let's head to the market, the crypto market, and see if there's Christmas in crypto. Laddie, no Christmas, no Santa Claus.
No, not yet.
Okay.
It's still fear.
Yeah, but I mean, you're looking better
market.
at 29.
Yeah, better than extreme fear.
Exactly. So it's a saint of Christmas.
Yeah, investors still trying to wait up for that Santa rally, but it's looking like it might not happen. But who knows? The market might spring a surprise.
We talked about Christmas miracle yesterday.
Yeah, we might have one.
It's still possible.
Just a few days more. So we'll keep watching.
Exactly.
But reality, it's fear in this market. 29 points, better than extreme fear. But some investors are hoping will be at around greed, at this time because it's Christmas, but it's not happening yet. Let's look at the market cap, 810.55. That's down 0.48%. We see more volume today, 60.89%. We see Bitcoin dominance sitting at 39.88%. Let's look at the price of Bitcoin this morning there. We see it's at $16,829. Started a kind of a relief rally this morning. They're up 0.49%. Volume inching up this morning, $21.55 billion. That's what's traded this morning. Look at the price of Ethereum now. We see Ethereum $1,211. Ethereum holding on to this $1,000 level, up 2.41%. Also joining in the rally, relief rally we're seeing in the market at this point, $6.19 billion. That's what's traded in Ethereum this morning. Let's look at the top alts by market cap now. We see it's all green. Cross board, even BNB there, even though we know the Binance Exchange has been hammered, recently, and that has impacted the token price there. We see the FTX contagion still, inching into Binance there with investors wanting to know how solvent, Binance is, at this time. We've seen that impact the price of the coin there, the BNB token there, $249, was up 0.53% this morning. We see Cardano, they're holding up 25 cents, down 2.59%. And we see XRP, 34 cents, far away from the 40 cent level it's managed to hold for a while now, up 0.21%. Let's bring in Solomon Amunde now to bring us up to speed. Hello, Solomon. Good morning.
Yeah, good morning, Ladi. Good morning.
Yeah, so we're seeing some kind of relief rally, this morning. We know the market was hammered, last week. Same thing with U.S. stocks. But is this a sign of things to come, before Christmas, this relief rally we're seeing right now?
No, I doubt, because looking at the weekly chart, Bitcoin is still ranging between the price of $17,600 and about $16,200. So I still believe it would range more for about 3 to 4 weeks before we can see a break above $17,600.
Right. And obviously, most analysts and, I've seen some forecasts into 2023. Some say there's still more pain, ahead. And obviously, risk assets are still being, sold off at this time. What are you seeing, for the crypto space going into 2023?
It all depends largely on stock markets too. So far, we haven't seen much of a downtrend on the stock market. We feel as though the stock market has actually capitulated, and at the same time, I want to believe capitulation has also happened in the crypto markets when we saw BTC hit about $15K. So we ain't expecting anything worse than we have seen already come 2023. But worst case, we would see about 15K, maybe a close at just below $15K, $500. But looking at the charts, what the chart is actually saying is basically Bitcoin hasn't closed below $16,200 yet on a weekly chart. So that goes to reinforce our faith that next year will be looking quite better.
And obviously, everyone looking out for that yearly close, for 2022. But let's look at the altcoins now. Which ones do you see shining in 2023?
Yeah, altcoins have bled really bad within the last 2 weeks, and come 2023, some very strong projects that have a very good structure. I would say the Tor ecosystem, Tor chain ecosystem. So I'll be saying Tor chain, Tor swap, and also Filecoin. Filecoin will be doing very well next year, and also Awe and Stargate. Also, BNB will be a very good buy. Should it drop to about $150 to be a very good buy. But right now, I won't advise anyone going hard on BNB at $240.
All right, well, we'll keep watching that. We know BNB there has been hammered for a while now. Those insolvency issues from the contagion, of FTX. But all eyes still on most exchanges. Thank you so much, Solomon Amunde, digital market analyst. Thank you.
Thank you.
All right, flip over to top 5 Guinness there. We see IMX topping that count up 9.96%. And we see Theta there and Mina Protocol 49 cents. That's up 6.56%. Flip over to the losers counter now. We see it's XCN topping that counter. Double-digit loss, 10.78%. And we see TON. That's the Telegram token there. That's had a good run recently. It's up about 50%. In a couple of months now, it's trading at $2.42, but we're seeing a pullback. Some profit taking at this time is down 9.44%. We see USDN there, supposed to be a stable coin, but at 55 cents there. So that's how the market is looking. Some kind of relief rally going on. Don't know if it's going to be sustainable because there's still a lot of weight on this market.
Yeah, well, let's hope for the best as we wait.
Yeah.
Thank you so much, Ladi. See you at 1:30.
See ya.
Business Incorporated. So that's it on the program today. Thank you so much. Counting down to Christmas. Are you excited? Well, we still have a couple of days to go out there, do business, and make money just before Christmas because you have a lot of spending to do. But I'm out now. I'll see you at 10 p.m. for the stock market report. And then we'll do this again tomorrow, God's grace, at 10 a.m. We'll have more relevant and current business conversation on Business Morning, only on Channels Television.